everybody. Welcome to another edition of Midas Letter RAW. And today I have with me as my co-host the lovely and talented Thelma Red Heeler. Thelma, how are you? Say hello to the audience. Thelma is an economist and a hell of a stock picker. She is probably responsible for more wealth generation than probably anybody you'll ever meet on Bay Street, Wall Street, Fleet Street, the city. I don't care where. She is the top dog when it comes to picking stocks. In fact, Lola, tell me, what was your favorite pick the other week? Oh, okay. She can't disclose publicly because she's a shareholder in these companies, and she's only willing to talk about these companies if. I see. Okay, so she's actually let me know that she'll be sending me research next week on the names that she gives me, but for the present moment, there's only a couple that we can talk about, and she says it's because I own them too. So that's pretty cool. Thelma, So Thelma is a 9-month-old Red Heeler. A Red Heeler is a version of an Australian cattle dog, and she and her sister came to live with me back in September, and she's just one of the best little dogs I've ever had. I've had Lola for years. I've never had Lola on the show. She's a bit big and corpulent and doesn't like to be picked up and put in a stool or a chair. But Thelma's pretty good looking, and boy, when the goats escape, because I now live on a farm, Thelma is a crack top herding dog at putting them back in their pen. Aren't you, Thelma? Who's a good girl? You're the good girl. Anyway, she's a real sweetie. Today on the show, I've got two guests. One is Anthony Cataldo. He's the chairman and CEO of GT Biopharma, Inc., trades on NASDAQ under the symbol GTBP. And I have to disclose that so far I've bought 3,000 shares of this company. You say 3,000 shares? That doesn't sound like much. Well, this stock, when I started buying it, was trading at $15. Today it's trading at 12 and change USD. So, you got to go lightly on this stuff. You don't want to try to build too much of a position too fast because you'll move the stock and you'll be the only guy sitting up there. Anyways, this company is developing therapies for leukemia, among other cancers. I believe I read they had 40 different indications in the pipeline, leukemia foremost amongst them. The results that I heard were astounding, but I'll let Mr. Cataldo tell you about that. Then we're going to hear from none other than Gary Yeoman, who is the executive chairman now of Voxtur Analytics. Now, you know that Voxtur Analytics is near and dear to my heart. A, because they sponsor our show. B, we manage their financial communications budget for marketing. We don't get paid by them. We got an option in exchange for managing their budget. But I bought stock in the company at 70 cents, which is right where it's trading now. The free trade, the hold period came off the stock. Excuse me. The hold period came off the stock just this week, and so there were 35 million shares purchased at 70 cents, no warrant. So that's why the stock's drifted down this far. The company has been more or less achieving its milestones as represented by the company. They've had a whole bunch of them. Gary will go into a little bit more detail on that, but the news. Oh my God, the news. The news is interesting. The most poignant news item that I've been following is this fact that Wells Fargo has decided to shut down every consumer line of credit. Now, that's intriguing. A line of credit is not a loan per se. It's basically a floating loan where you are always able to draw off of it up to the maximum amount of the line of credit. In general, the interest rate is variable. So the problem for Wells Fargo that they say justifies canceling this program is that the full consumer line of credit appears on their balance sheet as a liability. So in other words, if you have a credit line for $25,000 but you've only borrowed $5,000 on Wells Fargo's balance sheet, it still shows up as a full $25,000 liability, which is what they're using as their premise for getting away from that. Others out there, however, in the world of internet finance, speculation, conspiracy theories, and hush-hush, nudge-nudge, wink-wink, cloak and dagger maneuvers, are suggesting that Wells Fargo is getting ready for a black swan to come into view. What could the black swan be? Well, first thing that comes to mind is that the forbearance programs on mortgages are supposed to be coming to an end. First it was July, now I've read September. Either way, there are somewhere between 2 and 4 million U.S. mortgages in forbearance. When forbearance ends, it's not like a deferred mortgage payment where the missed payments are added to the end of the mortgage period. When forbearance ends, all of the missed mortgage payments are due and payable upon the day of the end of forbearance, which is going to tank a whole bunch of people because they went into forbearance, not because they had any extra cash, I can assure you. So there's only 10,000 mortgages in arrears in Canada. It's not clear to me whether mortgages in arrears in the data that I was looking at is includes or excludes mortgages in forbearance. But the bottom line here is there's an event on the timeline somewhere near in the future that could cause another housing market collapse. Now, I've been watching some hysterical commentators say that this is going to be this housing market collapse is going to be bigger than what happened in 2008. Maybe. But more likely, the government is going to implement programs to minimize the impact of the end of forbearance programs in America. So I don't think that's a big cause. The other aspect that could be driving a near-term market swoon or correction, if you want to be conservative about it, or meltdown, if you want to be dramatic about it, is the fact that G7 governments are starting to talk about, and in some cases are actually already stopped printing quantitative easing, distributing quantitative easing into their system. That is the buzz coming out of everywhere. The European Central Bank has voiced concern for the runaway inflation indicators that we're seeing. The CPI rising 3 months in a row now to over 2% per year. There's your target hit there, Central Bank. If that's your target, then it's time to stop printing, isn't it? But I don't think they're gonna. No, the U.S. will not do that because they have come to realize, and I suspect the oligarchical billionaires behind the government that actually tell them what to do there's conspiracy theory for you. Anyways, are going to say, no, continue, as was expressed by the Fed the other day. Inflation is transitory. Inflation is transitory? Yeah, okay. Well, I guess maybe it could be. Anyways, I came across a really cool cancer therapy development company. I have not had a very long success in investing in biotech companies, but I have had some. If you were a subscriber to my newsletter in the last year, you might have participated in, 3 or 4 multi-100% winners in a small time frame. And so I've started to dabble a little bit more in biotechs. And the great thing about a NASDAQ-listed biotech company is you're never going to get really hurt, at least not in my opinion. Not like investing in a penny mining stock where it's like a 50-50 crapshoot as to whether there's anything of value beneath the ground. Or worse, it goes to $15 only to find out that, it's not actually financially viable to mine this material. So with biotech, there's different set of risks. I'm not saying it's any less risky, but there are a different set of risks. And whereas in mining, the driver of value occurs at the head of a drill, with drill results indicating the valuable minerals have been intercepted. In the case of biotech, it's data. The data drives value. And so in the case of GT Biopharma, I was really impressed with the data because they had some results that you don't really need to be a clinician to understand the significance of these results. Their phase 1 trial was focused on safety, obviously, and toxicity. And so their patients that they treated were all in stage 4 with anywhere from 2 to 4 weeks to live. The results were astounding. I'll let Mr. Cataldo tell you about them. Here he is. Hey there, Midas Letter subscribers. My guest now is Tony Cataldo. He's the CEO and founder of GT Biopharma Inc. Pardon for the hesitation, as I'm new to the company. GT Biopharma Inc. trades on NASDAQ under the symbol GTBP. Tony, the reason I'm in such an interested disposition towards your company is because of the incredible clinical data that you've been coming out with as it pertains to your cancer therapy for leukemia. Can you give us a quick overview of the business of GT and tell us about these results?
Yeah, absolutely. I always like to remind the audience that I think CEOs talk too much and you shouldn't listen to anything we say, because in biotech it's real simple. It's all about the data, human clinical trial data. Unless you have that, anything that you're talking about is just not going to resonate. So GT Biopharma, everybody is familiar with the term targeted immunotherapy. It's been a nice buzzword for quite some, for the last 5 to 10 years. But it's only been recent where targeting is actually really occurring. And we leverage the immune system. I started a company called Iovance back in the day that became very successful, about $7 billion of market cap value, successful. And cell therapy it's the most expensive thing you can do in biotech. And that actually frustrated me because $1 million to $2 million per patient wasn't going to cover enough people. I grew up poor in the projects, and even if you have insurance, it's a fist fight.
Sure.
And so I wanted something that was off the shelf, and I also, sometimes the treatment is worse than the disease because some of these therapeutics are so brutal, chemotherapies being, the obvious one, but radiation therapy, it goes on and on. So it's all about the immune system. We uplisted to NASDAQ on February 15th at a $50 million valuation. We're now about $500 million. We've experienced tremendous growth because of the data. What GT has been doing that nobody else can do, because our patents protect it, and this is the first time ever. It's called a first-in-class, first-in-human FDA clinical trial. This biology has never been done before. And so through 12 patients, we have demonstrated that we're able to rescue your immune system with this special trike drug. It's called a small protein biologic. A drug is much cheaper to manufacture than a cell therapy. So instead of $1 million to $2 million per patient, this will be easily covered at about $200,000 in total. Everybody else is in our field spends $300,000 to $1 million clinical trial cost per patient. We spend $30,000. That tells you the economics of the drug are very sound. More important than that, it's the ergonomics that I focus on. What is the patient experience? All right, and in these types of therapies, when I mentioned earlier that sometimes the treatment's worse than the disease, they're brutal. And people's immune systems are trash because they're failed on chemotherapy, cell therapy, you name it. The trike has shown an ability to do everything inside your body without all of the other people in our peer group have to go outside and genetically engineer NK cells. We focus on NK cells. Yeah, NK cells are the most prolific cancer killers that your immune system produces. The problem with them is they only last 3 hours. So all the other technologies out there are trying to do the same thing, get an NK cell to kill a cancer cell. They're much more powerful than T cells. T cells become a problem. They can become overexpressed, cause cytokine release storm, that's toxicity, and hence the move towards NK cells, really causing a lot of excitement in the biotech sector. And in our sector, everybody's trying to get an NK cell, which stands for natural killer, to kill a cancer indication. We can program at that. And everybody can do that to a modicum of success. The problem is that they're having to go outside and manufacture NK cells to supplement their technology into the patient. And that again goes back to bad economics. It's hugely expensive. And then they have to use combination drug therapies to also work that way. So now you're causing additional side effect profile. The trike is a serial killer. And what you guys are going to see in the clip that you're putting on is that the trike is a serial killer. It doesn't just kill one NK cell like everybody else. And remember, I said NK cells only last about 3 hours. The trike lasts for months, and it continues killing as a serial killer multiple cancer cells. And what your audience is seeing is those are acute myeloid leukemia cells being killed by a trike NK cell that's continuing to kill as a serial killer, not just one cell and then it dies.
Sure.
It continues to kill, and it also causes your immune system to proliferate more of these types of killer NK cells with the trike. And that means, and that's all happening in the body. That's why the economics are so huge. The other thing about the trike in our study, which is now through patient 11, where we have real clinical FDA human trial data. Anybody else, any other biotech who's telling you that, preclinical this and we're going to do that, it's meaningless, okay? FDA data is, there's no ambiguity to it. It is what it is, and it's showing through 11 patients. And the FDA made us start out really conservative at first because they didn't know what the trike was going to do because of this super component called IL-15, interleukin 15, which can be a problem when administered separately, which everyone tries to do. But the way that Dr. Miller, who's the number one clinician and number one MD in NK technology in the world, is he figured out how to leverage IL-15 into our trike. And so to make a long story short, because I know we have a limited amount of time here, is the trike has become a serial killer, and there's been no side effects to any of the patients.
Zero
And these
toxicity.
are stage four terminally ill cancer leukemia patients, AML, acute myeloid
So no
leukemia.
toxicity whatsoever.
None. And that's
Okay.
different.
And how about the outcomes for this phase 1 group?
Well, remember, they're all 6 weeks to a couple of months to live, and they've failed on everything else. So 4 out of the last 7 patients, once we got the dose level to a high enough level to start registering, have all responded. That's huge. In a phase 1 trial, you don't see that kind of data. This looks more like phase 2 trials. So we're seeing clinical benefit up to almost 70% of elimination of the leukemia cells in the bone marrow. Blood level doesn't matter. You get levels there. Everything happens in the bone marrow. That's where leukemia comes from. And we're eliminating those cells to a large degree. And so that has surprised the market. That's why we're up 500%. But the good news for your audience is we're still the lowest market cap in that field, which goes from $1 billion to $8.5 billion market cap on the other players that have to do all that stuff outside of your body.
Sure.
So that's the opportunity here for you. And most importantly for me is to be able to deliver a cancer therapeutic that is so easily tolerated. And these patients have had the crap kicked out of them for many years in trying to fight their fight with, cancer. And we come along with a very easily tolerated drug that they're amazed. They sit back and they go, wow, you're giving me saline. There is no such thing as, a placebo in a cancer trial. Everybody gets the drug.
Sure.
But it's just that easy to tolerate, and that's really been fulfilling.
Yeah, great.
Especially knowing that, I grew up very poor, so knowing that you can service hundreds of thousands of people because your insurance is going to cover it and the cost is very low. And it's an off-the-shelf technology, and you can use it in earlier stages as well.
Perfect.
So that's the elevator pitch part.
Right. Okay. Quickly tell me about the capital structure. We're almost out of time here.
Right. We're real clean. 33 million shares fully diluted, 31 million shares issued and outstanding. We have $40 million of cash. We don't need money. We have enough cash to last for a couple of years. There's no debt. Our stock is GTBP, George, Tom, Paul, Bob.
Right. You got some in-the-money warrants out there too, don't you?
Yeah, the warrants, when we uplisted, we raised 28 million. We have over 40 million because the cash warrants, because the stock's 15.5 bucks a share, the people are exercising that, but we have plenty of liquidity. And like I said, we don't need capital. So what we need to do is don't make excuses, right? Because I find CEOs make a lot of excuses. And I've always heard, A lot of excuses for failure, never any excuse for success. So ignore that failure part. Do the
Yep.
work. Keep away from the BS, which everybody's used to hearing, and let the data speak for the company.
You bet. All right, that's a great introduction to the company, Tony. We're going to follow the story with interest and have you back in due course. Thanks for your time today.
All right, thanks a lot. I appreciate it, Jim.
You
Thank
bet.
you,
Bye for
audience.
now.
All right, sure thing.
All right, so there's a chart. GT Biopharma now trading at just around $11 here. Just over $12 rather. Anyways, I started buying it I paid $15 bucks a share for my first 1,000. Yeah, that's it. When I buy stock, it goes down. Apparently, geez, that's the way this thing works. My God. Anyways, no wonder I'm so poor. Yeah. So GT Biopharma, check it out. I think it's impressive. I'd love to hear from you guys in the audience what you think. Anyways, do let me know. It will be great to hear from you. We're going to hear from none other than Gary Yeoman, who is the executive chairman now of Voxtur Analytics. Welcome back, Midas Letter subscribers. My guest is Gary Yeoman, Executive Chairman of Voxtur Analytics, trading on the TSX Venture under the symbol VXTR and trading in the United States under the symbol VXTRF. Gary, welcome back.
Thanks for having me.
You bet. Full disclosure, I'm a shareholder of this company. They are a client of a related company. Gary, let's talk about the most recent headline was that you were forced to sell 5 million shares to satisfy a tax exposure, I understand. But you placed those shares strategically, and it really was not a meaningful component of your shareholdings. Can you tell us a bit about that, please?
Sure. As most people, or at least I tried to educate our investors, because I know how important it is that management leads the way with respect to not only owning shares but continuing to invest in the company. And having said that, I did invest in the company. I acquired 6.5 million plus or minus shares in the form of restricted share units, shares that were owed to me for me purchasing some time ago. But we ran into a couple of minor blips. Number one, in most cases, when you sell shares from RSUs, what you have is you have an administrator that administers the plan, and effectively what they do is they figure out once they vest what tax you owe, and they sell those shares to pay the tax, and then you're given the residual. In our particular case, we were under the view that RSUs were RSUs, and we didn't pay tax until we sold. So it was not my intention to sell any shares, but unfortunately they vested. And then I was advised that I owed, a whole bunch of tax. So effectively, I had no choice. We didn't have an administrator that was, appointed at that time. So I had to sell the shares to pay the tax. There was some supplementary funds left. Most people don't know that a lot of our business in the U.S., one thing is to maintain a business, and you can do that for Zoom. But when you're landing new clients, until they see the whites of your eyes, until they can, meet you face to face and go through it, then it's very difficult to land new clients. So what most people don't know that I went through 3 quarantines over the last, kind of 4 months, and it is extremely, extremely painful. And I knew that I couldn't continue to function with this business and land new clients if all of my time is being spent in Canada and having to go through this process. So I bought a property down there. So what didn't go to tax went to the property. I could have easily had the company rent me a place and expose that. But you know what? I think that that's my choice to grow this company in the United States. So it's my choice that I need to be able to do whatever I do to grow it and to, basically and whatever additional expenses they are for me to do that. And so that's what I did. But for clarity, I own 2 million more shares this quarter than I owned last quarter. So the net number of shares that I acquired were more than the number of shares that I sold. So, the message that I want to leave is that I'm extremely bullish on this company. I'm extremely dedicated to this company. I had to sell because of the conflict that we had where we didn't have an administrator appointed, as most people don't know that when RSUs are sold, they only see the shares that you acquired, not what the administrator had to sell to remit tax to the government. So
Sure.
that's all it
Okay.
was.
Let's talk a bit about the acquisition of Benutech. What is the significance of Benutech in the ecosystem of Voxtur?
Multiple fold. The biggest benefit for me is that Benutech, through an antitrust ruling some time ago, have full access to CoreLogic's data platform. And we're talking about all salient characteristics about a property, sales information on the property, assessment information, tax information.
Is this
So
U.S. or just Canada or both?
right now it's just the United States.
Oh,
As I said in previous interviews, the difficulty in aggregating data across Canada is much more difficult than the United States. The U.S. is much more transparent than what Canada is. We're working on it. We do have the data for all of Ontario. We're working with the Ontario government and with the MPAC organization. So we have had great success in Ontario, but we're mitigated for the rest of the country. In where a lot of our business is, probably 80% of our business in the U.S. right now.
okay.
And having access to all that data not only allows me now to personally go out and roll out my real property tax analytics platform. So I will be, I built that platform myself. I don't write code, but I brought a programmer in to write the code. I have, 40 years experience in the tax. I've been to the highest courts in the land. The algorithms are all not tendered around just value, but how are assessments determined? And it's not determined just on values. There's a whole equity position too. So I'm going to roll out real property tax analytics. There's 140 million properties in the United States. So we're going to roll out a B2C where someone can put in $20 and get a full report on whether you're what your position on taxes, whether too high, too low, and by how much. Even at 10%, people taking that up, it's a $300 million business. So we're going to roll out the B2C, confirm your assessment. And that's, absolutely critical for our health and well-being and our material growth in the company. We're going to roll out a B2B platform, and that's to all of the banks, all of the lenders, all the title companies, because right now, most people don't know that when these lenders sign off, they're acting as trustees on behalf of the owner until the deal closes. So they're signing and paying these taxes off as if they're correct. They're not doing any due diligence on that. So when I told them and showed them the platform we're rolling out, we have significant commitments already. So we expect within the first year to have a minimum of 300 lenders on board with the B2B platform. And so do I know exactly how we're going to price it? Is it going to be transactional? Is it going to be a subscription? Is it going to be some other hybrid of the two? We're working those details out, but I do know that all of the big lenders that we've talked to, we've had no one to say no. They all want it. They need it. And it's a very unique offering that we have in the workplace. The third leg of the stool for tax is what I call B2P, and P being public. So you got the counties and the municipalities that all, set the assessment rolls for tax purposes in the United States. What the counties don't have is that when they are either outsource evaluation or they have their own internal people to do the valuation. What they don't have is someone to do an audit on that valuation before the values are returned and delivered to the taxpayer. Our tool will be acting as an audit tool that they can review and match that up against their values to find out if there's any egregious differential. And what that means for them is that they want to have a transparent assessment role. They want to have an assessment role that has integrity for the benefit, not just of the government, of the ratepayers equally as well. And so, our algorithms and our methodologies and how we determine what a fair assessment is different. They do theirs through CAMA platforms, and it's through multiple regression analysis. We tackle it a different way. It's our own Colonel Sanders secret recipe. We've been doing it for 5 years. The government of Ontario absolutely loves these levels. It's very successful. I've been doing tax work in the U.S. since 1985. I was a head of real estate for Magna International. I looked after all the taxes aside from everything else in real estate. That's one thing I did. I know the business in the U.S. really well. I'm very eager and excited to be able to tackle this whole tax. And by having access to the flat files that Biotech has, for the real estate as a result of this antitrust ruling, is not only going to benefit us on the tax side, but what they're doing is that they provide software as a service and basically provide business opportunities to retain title, to find new potential buyers and sellers of real estate. And so it's a program that is tied into every one of the clients that we have right now. So when I told everyone at the outset of what is our strategy when it comes to acquisitions, it has to be real estate. It has to be software as a service. It has to be accretive, and it has to be synergistic. Accretive means that if I can buy things substantially less than the multiple we're trading at, that's accretive. Is it synergistic means that if we have a client that we're selling to Bank of America and I can sell them on tax, I can sell them on valuation, I can sell them on title, then we have an opportunity to cross-sell.
Yeah, you bet. Okay. So then tell me, in terms of the revenue, your last quarter was quite impressive. By any stretch of the imagination, $87.6 million annualized revenue run rate for March. Is that revenue tracking still at that level? And what's the financial picture looking like going out, call it 6-12 months? Are you giving any guidance there?
Yeah, so I'll say it very generically, right? I mean, obviously we're releasing our quarter in August, second quarter, and then others to follow. We believe that our revenue is going to continue to track very well and grow. We've got a number of new clients and new offerings that are taking place as we speak, and we'll be rolling that out to the public when we're allowed to, when we've finalized it and got the necessary approvals to be able to press release that. But we feel very buoyant on the opportunities and the things that we have, and the public will be finding out in due course. So our revenue is going to continue to grow and continue to track. I do believe that second and third quarter, with respect to financial profitability, will be reasonably flat because a lot of these new offerings, which cost money to develop and invest, like we did with ANOW, we believe ANOW is probably going to be the biggest home run that I've ever had. I'm just so thrilled. I mean, they've got 18 clients right now that are under different forms of contract, not including some blockbusters that we'll be talking about, as they become finalized. But what a terrific offering. So we believe that we're going to start showing reasonable profitability, reasonable to very good profitability in the fourth quarter, and then we're on fire going forward. That, right, in combination with the moratorium being gradually lifted, which is Jim Albertelli's business that we integrated with, that's going to start getting some wheels too. And so we know 2022 is going to be an awesome year. Fourth quarter is going to be very good for us. I think that where our revenue is going to continue to track well, second and third quarters, I think that from a profitability standpoint, I think we'll be pretty flat. Okay. We're investing a lot right now, and so you can't kind of always have the cake and eat it too.
Right. All right, Gary, that's a fantastic update. We're going to leave it there for now. Thank you very much for your time today.
Appreciate it. Thanks for having me.
You bet. Bye for now.
Bye.
As I said, I am a shareholder in Voxtur. I bought 100,000 shares in the private placement back in March at 70 cents. We have options in a related company, and they are our client. They don't pay us cash. We just do it for the option because we believe in the company. Anyways, that's our show for today. I hope you enjoyed it. Thanks very much for joining me. We'll see you next week.